weekend all. Ira Epstein with your weekend edition of your metal market update, and this is for Friday, the 7th of June, 2019, getting on to 4:11 p.m. Central Daylight Time. So a wild week. The market's still very concerned about what's going to happen between the U.S., Mexico in terms of the tariffs. There's still no answer on that. Today we saw the stock market have a rather dramatic move, the dollar down, and another bid come into the gold. As the market is suddenly pricing in, it's decided that the Fed is not going to go on a rate cut, but a series of rate cuts, up to 3 of them. I don't know if the market's getting ahead of itself. I'm not exactly convinced why the Fed has to cut it all just yet, but that's me. In looking at what happened today, you were looking at the jobs data, non-farm payroll, and it came in at 75,000 jobs. The market was looking for 185. So is this a one-off, or is this the beginning of a real slowdown in new job growth? Don't know yet. We saw wage inflation also slip 1/10 of a point. Market's concerned about that. So gold has been acting good. Now, if you haven't seen my gold report, go to our website at www.iraepstein.com under education, special metal report. Click on it. You'll be able to see it. It's a video report. And I think you'll find it interesting. It quits. In other words, we take it off the website on Monday. So if you're going to look at it, this is a good time to do so. Energy prices got a bid today. Interesting. Notes and bonds, well, you got down to 2.06 or so in the 10-year yield. Wow. When we come to a monthly bar chart, the one thing that stands out to me is this massive sideways action that has taken place since literally 2016. And the market is now at the first leg of resistance, the 100-week average of closes, 100-month moving average. I said that wrong. This is the monthly bar chart, the 100-month at 1350.90. We didn't quite get to it. We got to 1347.70, but we're knocking on the door. And as you come back to here, the high right here was 1344. So we've cleared those highs, which is now the reason that while I've left this on to show you the 100-week average, you really have a pattern of higher lows, higher highs, right into the first leg of the resistance. When we take a look at a weekly area chart of just closes, number one, this is an upthrust. The market is very much in short order. If we come back to May 24th, it's not history, it's 2 weeks ago. This was the settlement. The market then jumped last week, and this week the market takes off, and what's important is you can see you're at 1341.20 roughly, well over the last high close of 1329.20, which says to market participants that the market's entered an up leg, and we're back into these zones that we had back here, and I've left these numbers on intentionally in the 1353 area. We were here before, and that was a failure zone. When we take a look at how the market's acted, I put 1344 here so you can see on the weekly bar chart. Remember, the chart before is just closing prices. This is the weekly bar, and the trend is up. You have higher lows, higher highs. Where's the key moving averages? They're under you. The market fought a battle for a while, and we had discussed this on these weekly end-of-the-week charts. Between the 100 and the 18-week, you were going back and forth. You resolved it to the upside last week. And this week, the market just literally caught on fire, and you can see what it's done. When we look at the Bollinger top, there's reason for caution right here. Often, the first time you hit a Bollinger Band, the market gives you a bounce away from it, a turn, if you will. Yes, you can slide through it a little bit. Not surprised, but you're in a zone. And because you've been going sideways, the question is, how does this market react to whatever's going to happen with the president's decision on Mexico? Is it a short-term decision if he puts on the tariff? What if there is no tariff? Got to think that through. Then you got the FOMC meeting. The market's completely built in the Fed's going to cut rates. Really? I don't know. What if you never get to the tariff news with Mexico? And what if the economic data is just sort of stable? Didn't the Fed say they were going to be patient? So I realize what the market's done. That doesn't mean I have to agree with it. And I'm not fighting it. I'm a chartist. And as a chartist, you're in a resistance point. I think the smart money is taking a little bit of money off the table here. And I wouldn't be surprised if they're looking to buy this market on breaks. In terms of momentum, as measured by the indicator of slow stochastics, it's pointing up. The bias is up because you're over the 18-week average. You've hit an upside target. And now the question is, does the market accelerate from here, or does it pull back and try to base out again? In the GLD, the popular ETF, it's just like the futures. If we come back here, and I'll take you back to the 24th, the same thing. You'd gotten down to the Bollinger Band. Remember what we said, the first time you hit these majors, it's often an area where you stall. Even when you had this run up afterwards, you first stalled against it. Well, we stalled, then we went to the 18-week average, fell back to the 100, slid under it a bit, just like the futures, got itself over that, and then this is the week the market took off. And now you're over that number. Are you going to try to get back under it? Will be the question for this week. When we come to GDX, the trend is up and you have not yet hit your upside target. Gold miners often go hand in hand in a bull market with gold, and this is what's going on. There's room here to run still to 23.58 should it decide to do so. Momentum up, trend up, layers of support, but very important here. If you take a look, you see you had a crossover right on this week of the 18 getting over the 100, and the market was never over those two numbers. It came up to it finally last week, and this week for a change, it's finally paying attention. I would not be surprised that on pullbacks that tries to act as a support level if it's given the opportunity. The gold-silver ratio still favors gold. Yes, you got a little pullback in the market where silver came up a little bit, and you see that on the weekly chart. Notice where the silver stopped, right at what we call that line in the sand. This average is often a very important average as you go further and further back. Markets like to pivot around it. So now, are we trending? We are not. You have a lower low, higher high. That is not a trend. Momentum has turned up. The market went with the momentum back to the neutral zone, that 18-week average, and it's looking to see what to do next. In the copper market, we have been falling and falling hard. As world economies are slowing down, this market is seeing it. Now, the last time we got down, we were in this zone. So there's a few bucks left there, maybe. But if you look at the settlement today, you were at 262.75. This is now another week under the lower Bollinger Band right here. This week we closed at 260, what was that, 264, and the Bollinger Band was 260, let's call it 7, so you were under it. And this week you finished at 270.65 when the Bollinger Band was 269.40. So you have 2 weeks in a row under. It's rare that you get to 5. I'm just saying you're in a zone here that's important, and it can go either way, but what's the trend? Well, I have a higher high and a vertical price drop. That's pretty rough. Where would you put a stop if you wanted to go short? You're going to go short down at 262. It stops over the most recent high. Difficult play is my point. In the platinum, you're in a bear trend. You've got lower highs. You're under, now what, 3-4 weeks in a row, the 18-week average. To me, the question is, does it make it to the lower Bollinger Band or try to give you a bounce from here back to the 18-week average? The market's sort of acting like it wants to give you that bounce, but that still should offer resistance in that 845.70 level. You break the downtrend if you get over this zone right here, which is 887.50. In the palladium, it's void of a trend. The bias and momentum are down. You've been under the 18-week average. The daily charts are really just chopping away right now after the market fell from this dramatic price rise that it had. You know, I tell you it began in December, but if you go back, it really began a year ago, and it went from really the 8 area up to 1560. Prices almost doubled, and now they're sort of consolidating, but on the downside. In the dollar index, you have a market that on the weekly charts is caught between the Bollinger Band top, and if you look, each time it's hit it, it's faded back to the neutral zone of the 18-week average. In the process, you've got momentum down, bias down, but you're not trending. You have a higher high and a lower low. So it's an interesting time in the market. Obviously, what happens over the weekend with the president's decision on Mexico, their reaction to whatever happens, and then the Fed Open Market Committee meeting, going to be interesting. And I'm going to discuss all this. What I do is each morning at 6:15, that's a.m., Central Daylight Time, I put out and I start actually making a recording. The recording's probably, I don't know, 10, 15 minutes long, depending on how much I want to say. And it looks like this. I'm not in the recording. I'm wearing a headset doing this right from my office and putting out for you trade ideas. So the idea is you've got your own ideas, ideally. You're having your cup of coffee, whatever, and I'm going to cover all these categories. The nice part too, is you can move your cursor just over your move bar on the recording, and it's going to light up and say stock indices, foreign currencies, whichever area you're in. There's also a lexicon on the side so that you can click that and go right to that area. So you may not want to know anything about grains. You might just want to know about energies that day. Just click that on, away you go. The difference between that video and these is, number one, more studies. Number two, I am able to say buy here, sell there, do this, do that. Extremely specific. I can't do that here. These videos are meant to talk about general trend of the market and the reasons why the market is generally trending there. But it's certainly not about buy here, sell there. So if you're like me, you're always, before you put on a trade, gee, I wish I had somebody to talk to, or what does somebody else think, or somebody I respect, boy, that makes sense, or it doesn't make sense. Either way, you're looking for input. And trading's lonely. So by starting it off this way and having it ready for you by 7 in the morning, which is before all the major U.S. reports come out, you're getting a handle on the market and what's happening in Europe, Asia, because remember, we're trading almost 24 hours a day. That's the idea. What does it involve? Well, if you haven't tried it, 26.5 cents a day for 30 days, $7.95. Not so expensive. If you like it, you can stay with it. You don't like it, you just put it on suspense. You're not going to be charged anymore. You're done. You don't get it anymore. If you do like it, you can either go month to month, $15, or a 1-year subscription to it, $156. Either way, if you go to my website and you go under Research or Education, Ira's Morning Subscriber video, there's a full explanation of how it works, what you can do, and away you go. Why not give yourself a try for $7.95? It's not even a tick in most of the markets. You have a great day. I'm Ira Epstein.